Welcome to Gaming Fin, your channel for everything related to the gaming industry and the financial market. Welcome to this Sunday weekend video. So we're going to have a very quick update on my portfolio, and then we dive into the Embracer Group full year report, April 2023, March 2024, which was coming out this week. And for this then, my friends, we are going to watch a little bit what our friend Lars Wingenforce has to say, and we watch it a little bit fast because he talks so slow. All right, so let's jump directly to the weekly. So this is now the weekly performance of my gaming stocks portfolio. So you can see here weekly for Square Enix is 1.76%, so it's down a little bit. Digital Bros had a bad week as well, 6% down. Bigben Interactive came nicely back with 9%. Nintendo is 4.34% down, and as I told you, I'm absolutely fine with Nintendo continuing to drop. Capcom 2.62% down, CD Projekt 1.2%. Ubisoft actually came back this week after they had a pretty bad after earnings situation. I talked about this in the last video. So SNAIL dropped almost 9%. Paradox Interactive is now at around 4%. Focus Home had like no change at all, 0%. Frontier is a little bit down, but they still nicely up for me over the time. Then we have Embracer 11.72%. So Embracer, but we're going to talk about Embracer obviously a bit more. So earnings were not very popular. Thunderful Group 5.4% up, but the stock is more or less dead. Playtika 5.47% down, which is actually wondering me a bit. DontNod almost 1% down. Then we have CI Games 5% down. That's actually sad to see because I thought like CI Games would have a little turnaround. Team 17 almost 5% up. Starward Industries more or less flat. Nacon was coming almost 7% back, and Remedy at 0%. Nexon minus 5% roundabout. So I'm just rounding up a little bit. Starbreeze, ENAD. Yeah, Microsoft 2.37%. If we wouldn't have Microsoft, then probably our portfolio would be much more down. Ultimate Games 1.82, Bloober minus 1.18, Corsair a little bit up. Unity had another terrible week, minus 11.43. Tencent almost minus 5%, Playway Take-Two 3% and almost 4.6%. So overall, kind of flattish. Therefore, I don't want to spend too much time here for the weekly update. So as you can see here, that's how it presents itself now. $74,434, still down, of course. And this was on Friday. Yeah, and I would say overall, it goes in the right direction, but we don't know when we will finally see better times. So are we going to see the better times with Embracer? That's of course the big question. So here the CD Projekt actually went down a little bit, so that was sad to see, but I told you guys, so it's not that we necessarily now go so easily through this trend line. It's some sort of a trend line actually, but the moment we get through this, then we definitely have a bit momentum. Embracer Group, as you can see, it went down again. Let's see if we can hold up here on this moving average, which is 5-day moving average, I think. And then Ubisoft also, here you see this was very crazy what was going on then around the 13th of May. But let's see if we actually manage to get up again. But I wouldn't even wonder if we fall back down under the 20 euros. Everything is possible. All right, so guys, let's go and watch the Embracer video with the earnings, and then we will see what my opinion is about Embracer. So before we start, no investment advice. I'm a YouTuber, retail investor, and information and entertainment purposes only.
Thank you, Jacob, and hello and warm welcome to this Q4 presentation in Stockholm. Let's dive straight into the business highlights for the fourth quarter. So net sales came in close to 9 billion SEK, which is a 5% decline year over year, mainly impacted by a weaker revenue within entertainment and services compared to last year. Looking at the profitability, I'm glad to see that we are making more money, 56% in adjusted EBIT growth to 1.4 billion in the quarter, driven by an excellent performance within mobile, solid performance within tabletop, and in line with expectations within PC console. Worth noting, this is despite a significant negative contribution from the divested companies to adjusted EBIT. Looking at the free cash flow, came in at 500 million, which is a significant improvement over a flat cash flow last year.
If you say so.
Despite, again, negative impacts from divested assets of 500 million EBITDA minus investments. Looking at the year, full year, we have a double-digit growth both in sales and adjusted EBIT to 42 billion and adjusted EBIT just over 7 billion in the year. Worth noting that the pro forma sales, excluding Saber and Gearbox, were 40 billion, with a higher adjusted EBIT of 7.3 billion and a EBITDA minus capex of EBITDAC of 6.3 billion. The full year cash flow were 1.5 billion, despite a negative 2.2 billion EBITDAC contribution from the divested assets. End of March, we had our annual or the year end, and we're doing impairment. And this morning, we reported a significant amount that I'm very respectful of. 20 billion impacting our reported EBIT in Q4. And it's important for all shareholders to understand what that is. 11.4 billion is relating to the divestments of Saber and Gearbox. 1 billion is relating to the now finalized restructuring program in the fourth quarter. And then we have an annual impairment of all our goodwill across the group. And this year we have decided to, and which also resulted in a 6.7 billion impairment of Asmodee, which equates to around 20% of the 34.4 billion that we paid in consideration 2021. The actual cash effect of all this is 265 million. We are now looking ahead to a solid year. This year, ending March 25, we are expecting a similar performance.
It's like the impairment, I think, are problematic in my opinion. So, and Lars is trying here to tell us it's not so bad, but it doesn't feel good. It doesn't feel good.
Compared to the actual adjusted EBIT reported last year. But with the material, and most important, with the materially improved free cash flow and EBITDAC.
Yeah, okay,
okay. Within PC console, we have two titles. I would say one of them, Kingdom Come Deliverance 2, is a very important game for us this year. And Killing Floor 3, and you can compare them to Dead Island and Remnant that we had last year. I'm personally excited of all our games, but Kingdom Come Deliverance 2, I think will be a hell of a game and done by one of the absolute best teams in Europe. And I think it will excite a lot of players.
Agree,
having such a game with the own IP, own studio, and own distribution.
Great game. First one was a great game.
You are able to capture a lot of that value creation. So if you sell another million or a few million units, obviously it has a swing factor in the year. I believe, considering that, we still have a reasonable expectations on that and other titles in the year. In total, we expect to release more than 70 projects in the course of the year, including 3 important unannounced titles for the year.
70.
Not to the scale of Kingdom Come, but important. We are expecting to complete games of around 3.9 billion in the year. That's our expectations today. Last year we completed of 3.4, I'm looking at you on, 4 billion. Which approximately 10% only in Q1, 20% in Q2, 55% in Q3, and the balance obviously in Q4. That's our current estimation today. But beyond this year, we see growth in the business, driven by a good number of very sizable PC console projects, based on both established and new IPs. Our resources within PC console are increasingly focused towards our own and controlled IPs, such as Darksiders, Dead Island, Deep Rock Galactic, Kingdom Come Deliverance, Killing Floor, obviously The Lord of the Rings, Metro, Remnant, Satisfactory, Tomb Raider, Breakfast, and many, many others.
Good names.
Looking in Q1 ending now in June, we see a broadly stable adjusted EBIT for mobile and tabletop, but a limited adjusted EBIT contribution for both entertainment and services and PC console due to the timing of new product releases. Also worth highlighting that we finally completed our restructuring program end of March. It's been a rough year for us, and I'm glad that we now are post that. And we are expecting a notable delevering of our balance sheet in the course of the year, driven obviously by the considerations from the two recently announced divestments, but also the stronger free cash flow generation. We were able to reach a CapEx run rate of around 4.3 billion as of Q4, which I think is a notable achievement comparing when we started of 7.9 billion a year ago. Over the past year, we have made significant progress shaping the future of the group. We have improved the balance between growth and cash flow generation. The
Look at
divestments
his
of
eyes.
parts of Saber and Gearbox will improve profit margins and cash flow conversion, reduce financial leverage, while subsequent decisions to initiate the separation of the group into 3 publicly listed companies sets a clear strategic direction into the future.
Yeah.
And I'm encouraged to see that all shareholders, or most shareholders, all I've spoken to, share our view of that transformation process. And so far, it's all good, and processes are tracking according to plan. Ultimately, this will create value for all stakeholders, but importantly, it would improve the conditions for our entrepreneurs and employees to create more and better products ultimately.
Take you on this.
That's the reason we're doing it. Also, finally, in the highlights, or I don't know if this is a highlight, but I was sad to, in a way, but also glad that Johan came to me a few weeks ago, start talking about that for private reason he needed to change his role. And we agreed that you will remain until end of March. You have been absolutely essential to the build up of Embracer, and you're a really good leader and a human, and I'm really thankful for that. And you're welcome back any day, Johan. But we still have a year almost. But being a public company CFO is kind of driving a Formula 1 race, and I have all the respect of that decision. But really glad also to have Müge already on board that could actually take on this duty from September 1st. So you will see both me and Johan here in Stockholm in August. Also glad that Phil Rogers accepted to take on the duty of a deputy CEO on June 1st. He's currently leading the group of Middle-earth and Friends and CEO of Crystal Dynamics, and a very experienced leader within the industry.
That's good.
Right, a bit more details. PC console, mixed performance in the quarter. We had a number of highlights. Really glad to see a strong performance for some smaller budget titles, but very important to the group, such as the remaster of Tomb Raider, published by Aspyr. I'm really glad to see that we own the IP, Aspyr done the work and the development together with Saber and publishing it, and then now we are able to physically release it exclusively to consumers by our company Limited Run Games. So we kind of have the whole value chain there, capturing the full margins, which were a notable contribution in the quarter. We also had other titles exceeding our expectations, such as Deep Rock Galactic from our amazing teams in Denmark, performing very well. Aspyr also had Star Wars Battlefront, contributing financially in the quarter. We also had a number of mid-sized titles from THQ Nordic not reaching their full potential, unfortunately. and it was part of
Like
the
always.
weaker performance on the margins within PC console. Overall, we had a minus 13% organic, but 3% growth on pro forma in the quarter.
Minus 13
We see a
organic.
stable back catalog performance of 1.6 billion. And here to the right, you can see the top 10 titles. Dead Island 2 continues to perform. We had the last quarter of SnowRunner. Then we have Star Trek, Remnant 2, that we continue to invest into, Arizona Sunshine 2, Risk of Rain 2, Hot Wheels Unleashed continues to perform. Deep Rock Galactic, obviously, Neverwinter Nights, and finally from Gothenburg, the Bloxburg team at Roblox. The ROI chart has many dots now. This quarter,
Return of invest.
it's a mixed performance again. Glad to see 3 titles above 4 times return of investment. And remember, this sample includes projects with sales above 40 million or investments above 40 million, which is currently 98 projects or dots on this slide. The average are still stable at the level that I would like to see increasing in the future, and I'm confident it will increase in the future, but still at 2.2 in average. And it will increase on the long term. Obviously, now there's a 26 billion of net sales in this formula, so it will take some time to, you know, to have the maths to improve. But our updated capital allocation process, focusing on what we believe the most in, will improve the return of investments over time. I'm confident in that. Here's a slide showing that we continue to invest more into the future than we are completing. In the quarter, we completed games of 700 million, but we invested 1.4 billion. That gap will be smaller going forward, but still we would see a growth investments. As of March 31st, we had 6 billion of capitalized games on the balance sheet. So, solid pipeline of new games for this current financial year. 70 projects. I already talked about Kingdom Come 2, Killing Floor 3, but there is more important titles of the year. Epic Mickey Rebrushed, Hyper Light Breaker, the Gothic Remake, Titan Quest 2, alongside many, many other projects. We will also continue to invest into our live and kicking games, such as Remnant, Goat Simulator, Satisfactory, Deep Rock, Dead Island, Valheim, Star Trek, Neverwinter Nights, and many others. Moving to mobile, which had a very strong profitability in the quarter, reaching 38% or 514 million, which is over 50% increase year over year. Driven by a number of factors, but one of those factors is obviously the transition that Crazy Labs has been doing from hyper casual, which is a low margin business but high revenue, to a hybrid casual where gamers engage longer within the games and is monetized differently, partly differently. We also see lower user acquisition costs coming in this quarter at 478 million or 35% of revenues. We still have 29 million players daily playing our mobile games, or 229 million players on a monthly basis. Easybrain continues to shine and perform strongly with a high single-digit organic growth in the quarter. Tabletop had a solid adjusted EBIT performance, growing more than 50% year over year to 380 million. It's a notably improved margin mix driven by more owned or published products. The free cash flow generation within Asmodee are excellent, and it was actually more than 100% of the adjusted EBIT in the full year. The new trading card game Star Wars Unlimited shined in the quarter, exceeding our expectations, and has been selling out all across the world. We're now working with the teams to set the future of that, and they have a very solid plan with a number of new sets reaching the market. But it's important now for all digital gaming shareholders to understand it's a bit different dynamics of trading card games. This is not a short cash grab to just print things and then leave the consumers. You are building an ecosystem together with your players over a long time. So this will be an important product for us, obviously this year, but also in the coming years. This is a recurring business if you manage that well to please that ecosystem with players.
Okay, I like this.
So far, they are out to a really strong start, and I'm glad to see that. We also, in the quarter, worth noting that we had a bit shift of releases within distributed products, and that was partly a reason for a small decline in organic growth in the fourth quarter. Entertainment and services came in at 1.2 billion, or 48 million in profitability, which is 18% organic growth. Obviously, this business segment has a big swing factor in new product releases. Also, there's a great swing factor in profitability coming out from Middle-earth enterprises, depending on how much royalties they have coming in, and obviously it's been swinging over the quarters because of, for example, the relationship with Hasbro that has been very successful earlier in the year. Happy to see that Dark Horse has transformed back into profitability and growth again, and has some solid new releases in the quarter. What I'm most excited about in this segment is obviously the future, and the future of Middle-earth, and what we announced together with Warner a few weeks ago. I think that is one very important piece in the whole journey of Middle-earth over the coming decade. It will benefit fans and shareholders over the long term enormously. Yes, we will have royalties coming in from the movies, but most importantly, it will widen the overall interest in Middle-earth and that whole world, and we could also create more gaming products based on that interest. And the same thing goes with Tomb Raider. The relationship with Amazon becomes stronger and stronger, and we're not only having the biggest game being developed together with Amazon, now we have a relationship on film and streaming for Tomb Raider in the future, also announced a week ago or a few weeks ago. Very important for that franchise. And finally, looking on the market, we see a stable market development 2023.
That's important.
With a flattish year over year. But ahead, we see a 3% expected growth this year, driven primarily by PC and mobile. Looking on the long term, we see a roughly 5% compounded annual growth rate up until 2026.
That's good.
So with that said, I would leave over to Johan for financial comments. Welcome, Johan.
Thank you very much, Lars. And thank you for the kind words earlier. Let us take a look
okay, very quickly.
Our financial development. So sales are 0.5 billion lower than last year, but adjusted EBIT is 0.5 billion higher, thanks to improved profitability. Full year sales amounted to 42 billion for the year, with an adjusted EBIT of close to 7.1 billion, or 17%. The sequential increased gross margin in the quarter is in line with our expectations, with the product mix more geared towards PC console and favorable development within tabletop segment. We also note that the marketing expenses in relation to net sales amount to 7%. Marketing expenses outside of mobile are lower compared to previous quarters, and mainly due to fewer larger releases in the quarter. And within mobile, we note that user acquisition costs are lower in the period, which is in line with the increased focus on profitability in the segment. Operating expenses continue the decreasing trend as effects from the restructuring program continue to be realized. In the quarter, operating expenses amounted to 2.4 billion SEK, which is a reduction of 11% compared to the same period last year. Adjusted EBIT increased to 1.4 billion in the quarter, setting a new all-time high on a yearly basis at close to 7.1 billion SEK. We thought it would be beneficial to highlight and explain the bridge between adjusted EBIT and reported EBIT for the quarter. And as you can see, reported EBIT was negative in the quarter, 20.4 billion, and adjusted EBIT amounted to 1.4 billion. The difference of 21.8 billion comprises of two parts. 1.5 billion is related to specific items for historical acquisitions, and the remaining part, 20.3 billion, is related to items affecting comparability. It's worth noting that 21.5 billion are items not affecting cash flow, and only 0.3 billion is affecting cash flow. Specific items related to historical acquisitions are acquisition-related expenses, such as expensed earnouts, as well as planned amortizations for acquired surplus values. If you look at items affecting comparability, we have 4 projects or initiatives. 1.2 billion relates to our restructuring program. And it is important to note that the write-offs of game development are considered items affecting comparability only when they are related to projects affected by the ongoing restructuring program, where the studio or team has been discontinued. 8.6 billion are related to the previously announced divestments of Saber and Gearbox. And the remaining 10.4 billion is an effect of our annual impairment process, where 2.9 billion is a direct consequence of the divestment of Saber due to change composition of cash-generating units, as well as internal transfers of business agreements. 6.7 billion relates to Asmodee, and is mainly caused by higher interest rates, as well as a more prudent view on future expectations. It is also worth noting that revaluations of earnouts have been recorded in different reporting periods since the closing of each transaction up until the end of March 2024. The revaluations are part of the financial net and mitigates the effect of the goodwill impairments. For the remaining assets within Saber, the reevaluations amount to 1.6 billion on an accumulated basis, and for Asmodee, plus 2.2 billion. For Asmodee, the impairment corresponds to approximately 20% of total consideration by closing date, valued at the exchange rate as per the end of March, or 13% if you consider the positive mitigating effect from the revalued earnouts. If you look at the cash flow for the quarter, free cash flow amounted to approximately 0.5 billion, growing with 0.5 billion over last year. It is worth noting that this is despite a negative 0.5 billion EBITDA contribution from divested entities. And we continue to see positive effects from the restructuring program in our cash flow, both on operating expenses as well as reduced capital expenditures. Cash flow from financing activities in the quarter are impacted negatively by less utilization of credit facilities in PlayOn. Net investments in acquired companies in the quarter relates to payments made for historical acquisitions. And the cash effect of items affecting comparability relates to cash payments made under the restructuring program. Looking at the full year cash flow generation, we note that the free cash flow increases with 1.5 billion over last year, driven by improved EBITDA as well as reduced working capital. At the end of March, net debt amounted to 16.4 billion, and available funds amounted to 5.3 billion. It is worth noting that the net debt does not include the interest-bearing receivable we have towards the buyers of Saber Interactive, which amounts to 2.1 billion. In April, we signed or secured a financing agreement at the Asmodee level. The financing amounted to approximately 10.5 billion or 900 million euros, with a maturity of up to 18 months.
Yeah, now that's all this financial engineering. Let's call it like this. Guys, I'm stopping it here. So I think so. It's a lot of financial engineering going on. And I have to admit, I think this is very difficult to understand at the moment what is really going on. And even if they talk now about these aspects, then 1 week later we get this other news, like we were getting the news when they were divesting companies. Then we get the news that they are creating 3 separate entities. Now they tell us how they use the financial engineering, let's call it, with impairments, with debt, and how they put the debt on one of the other companies, etc. So it's very difficult at this moment. So respect if you fully understand what Embracer is doing here. So I have to admit at this point, I think we need more clarity, and therefore I think this was also the assessment of the institutional investors, because look at this. So why would we have dropped? So okay, here from a mere technical point of view, 30 to 26 makes sense to drop, but was it not also that a lot of the bigger investors might not be so convinced? I mean, Lars, he's happy. He sounds very positive. He looks much better than in previous earnings. But is it really going to be a an added value? Are we going to create more value for the shareholders? So it's very difficult at this point in time to say. Therefore, I personally am not going to buy more shares. I'm not averaging down. I'm just now observing this. So I have my position in. Maybe it turns out that my loss is not going to be so big. Maybe in 5 years I'm back to zero. Maybe I even gained some money. So, but at the moment I do nothing. I'm also not selling. So I have to say this because I'm a long-term investor, and yes, it's a negative. We're in a negative point here. It's not fun at the moment to be an investor of Embracer, but maybe they really managed to turn it around. So I'm around about here, 40, 48. So that's my average price. So nothing is lost yet, but guys, very reluctant. No financial advice. Do your own research. Embracer has been a hell of a ride, this stock. So this stock was really, people thought, yeah, it will never stop growing. And then it got so hammered. It's so negative, the story. Story is negative. Everything is negative. So if you really understand everything here and you come to the conclusion that it's a good investment, then congratulations. And congratulations, especially if you actually then also make some money out of this. All right, so leaving this here, guys. No financial advice, as always. You make your own research. Have a wonderful evening. See you next time. Bye-bye.